There's so many ways to buy investment properties. 1,000 ways, 1,000,000 ways. End of the day, it's all about what is your buy box? What team are you going to use? Will you buy income property? I could only talk about one way to buy. And hopefully you learn something and you might want to use this way. Like I said, it's just mind-boggling. We live in a social media world. The power of technology, the power of artificial intelligence. We're getting really information overload. Information overload. There's so much information. There's so many investment pitches everywhere. Buy this, buy that. Go buy through me. Go buy. It's just mind-boggling. That's why so many prospective investors are paralyzed by inaction, paralyzed by fear and they stay on the sidelines as a result because, again, it's just information overload. In this society, it's just, there are so many options, so many choices. But having said that, I could only present one way, my way, and if you like it, then take it further. If not, hey, at least you spend a good 15 to 20 minutes listen to me, and I appreciate your commitment of your time to listen to me. Who knows, if you follow my system, my path, my blueprint, hey, then something good is going to happen to your financial future. That's all I can say. I'm talking about buying rental properties. Look, over the years, I've been doing it for 20 years. I've done so much, and I help hundreds of students, guide them along, coach them, mentor them to achieve long-term wealth through income properties. Look, if you've been watching my YouTube channel, if you watch my website, the Year Real Estate Network, mainly I promote new construction, single-family home, new constructions in the growth markets, emerging markets, cash flow, turnkey market with professional property management. Those properties are really good. Most of my investors, they gravitate towards those type of investment methodology. And they cost a little bit more, $250,000. On the average, single family home, new construction, rent for like $1,750. You put 25% down payment. You can have like a couple of hundred dollars a monthly positive cash flow. And then over time, you will create wealth that way through equity growth, the tenant paying down your mortgage, and great tax benefits, increasing passive income. You buy and hold for 10 years or longer. If you buy enough of them, right market, surround yourself with the right team, you're going to do well. With that said, now some investors, the reason why I'm talking about Buffalo Niagara Falls is the representation of the Midwest. I would say, I don't have the exact data, but I would say maybe, 80% of all the mom and pop real estate investors, they buy in the Midwest. Why? Because they are very inexpensive homes. They are cheap homes. They're easy to get into. Down payment is only 20 to 25% down payment on an investment home. Costs like 60, 80, 100 grand on a single family home. A duplex costs like 100,000. A triplex costs 150K, or fourplex costs $200,000 to $250,000. The barriers to entry is easier. Over the years, 80% of all the mom and pop investors from all over the country buy these type of properties in the Midwest, blue collar environment, older homes, 50 to 100 years old. That's fine. Nothing wrong with that, as long as you find yourself a good team, a good property manager, and a good rehabber who can rehab the property to turnkey ready, fix the property nicely, and you can cash flow. People buy these kind of low-cost homes. Maybe investors, they want cash flow. Appreciation is secondary. They buy enough of them, 3, 4, 5 or more of these rental properties, that they could achieve their goals in 5, 10, 15 years from now. Because this type of properties in the Midwest, the cash flow is higher than if you buy somewhere else. If you buy in the South and Southeast, where I promote my properties there, is much more expensive and the cash flow is not as high, but still cash flow. But it's more about appreciation play in the growth market, new construction, turnkey markets that we represent in Florida, Texas, Oklahoma, and Alabama, and Tennessee, and a few others. With that said, I can only talk about Buffalo right now, which is we connect with this turnkey provider for a number of years now. That know their market. They've been like this mom and pop company in Buffalo, Niagara Falls. They've been doing it for 30 years. They help out-of-state investors buy these great properties cash flow properties, all rehab. It's just the returns are high, but you have to factor in the maintenance and upkeep and the vacancies. It's a C plus, B minus locations. So if you're investors, if you understand the expectations moving forward, the pros and cons of buying in this market, then why not? Why not pull the trigger regardless where you live, regardless whether you live in California or expensive market where you cannot cash flow in your local market, then you have to buy out of state, you have to buy long distance. And the Midwest and in our market that we represent, Buffalo Niagara Falls, could be one of the market that you want to pull the trigger and invest for the long term, mainly for cash flow, passive income, and secondarily, a little bit of appreciation. With that said, let me continue to dive in to my slideshow. Buffalo, in case you don't know, and Zillow is the top 10 real estate market, housing market for 2 years in a row, 2024 and 2025. Go figure. And all the other markets, I don't know if they use this kind of metrics. I may or may not agree with some of the metrics that they use, but whatever. Still good to know that Buffalo, upstate New York is doing well. Refin also mentioned the upstate New York, Buffalo, Rochester, Albany are among the nation's fastest housing markets. And that's quite surprising and quite welcoming. That's good. It's not like your investment is going to go bad long term. No, it's still a good, steady, stabilized, good market with good fundamentals. As you can see, Buffalo is ranked in the top 10 with other metrics. And of course, every week or every few weeks, our turnkey provider that we've been doing business for quite a few years now, they provide us with the off-market listings, and they have a great system and process and procedure. This turnkey provider in Buffalo, they find the deals, they find those distressed homes at a way below market value in their market, and they rehab it with their own crews, and they buy discounted materials through the local Home Depot, and they sell to out-of-state investors even at below fair market value. These rental homes, very high cash-on-cash return, single-family home, duplex, triplex, and fourplex, and they have done a great job. These off-market listings, they're very desirable. They're in a C plus to B minus neighborhood. In terms of vacancies, you project maybe 5 to 7% vacancy on an annual basis, project maybe 7% maintenance factor, a little bit higher than other markets, but this is the expectation. This is what's happening, and many investors are with that. As long as you're knowing what you're getting yourself into, there are no surprises. You anticipate this type of scenarios, but you get the good with the bad, but the good overcomes the bad. You're just going to understand your buy box. If you're limited in your financial resources, if you want to scale your portfolio, you can buy 3 or 4 or 5 of these in the next few years with 20% down payment. In this example of a single family home, $63,000. That's right, $63,000. It rents for $800. And you put 20% down payment, which is only like 20 grand. Come on, 20 grand. You got yourself a nice turnkey cash flow properties that's been pretty much rehab from a very reputable turnkey provider on the ground that we have a relationship with for many years. And they specialize with our out-of-state investors for many years. They have thousands of investors. As a matter of fact, this market, let me go over to pro forma. This is a single family home. This is a duplex. And this pro forma, I think about a year ago, this duplex is probably higher than $69,000. It's probably like $75,000, $80,000 by now. But nevertheless, they're older homes, 80-year-old homes. But hey, these homes have a brick. They are well built. They have a good foundation. They've been rehabbed a number of times over the years. It works. You just the houses are not pretty. If you want to buy a prettier house, it'll cost you more. Nothing wrong with that. So if you want to scale, if you want more cash flow income, if you're closer to retirement, 5 to 7 years away from retirement, and you want more passive income, and appreciation is not that important to you because you don't have a long-term horizon, then this kind of market, building and scaling this type of real estate portfolio, is nothing wrong with that. Like I said, more than 80% of all the real estate investors in this country have purchased these type of properties all over the Midwest, not just Buffalo, like typically Cleveland, Ohio, Indianapolis, Indiana, or Detroit, Michigan, or St. Louis, Missouri, Chattanooga, Tennessee, Memphis, Tennessee, or Dayton, Ohio, this type of Midwest type of market have this type of homes and it cash flow. The numbers, you meet the 1% rule. The 1% rule, right? The 1%, let's say the purchase price is 100,000, multiply by 1%, and that equals 1,000. The $1,000 is the monthly gross rent. The 1% rule still works to this day in the Midwest market, where because of the skyrocketing of home prices and elevated mortgage rates, it's very hard for investors to cash flow these days. They have to. But in our market in Buffalo, Niagara Falls, it cash flow. It's the 1% rule. If you meet the 1% rule, then when you put 20 to 25% down payment, you could have a very good monthly cash flow. And the pro forma bear that out. This duplex, we look at 25% down payment is a minimum down payment. Out of pocket is only $21,000, including closing costs. And the rent on those two doors, $1,050, no taxes, insurance, property management fee. Your monthly cash flow is almost $300. Look at the rent to value ratio is even higher than 1% in this particular case. In this duplex, the capitalization rate is 10.9%, cash on cash return is 16%. This is numerically off the chart. So moving forward, you're not going to expect this type of overly attractive ratios anymore, but you have to come back down to earth because these days it's very hard to buy cash flow properties. You may not see this type of numerical metrics as I explained to you. But again, some of you might be asking, oh, Mr. Yi, can you explain to me what all these metric means? I have several other videos that you can access that can talk about this type of formulas. These numbers all works well, just really low down payment, higher cash flow. So over time, in the next 5 to 10 years, when you own these kind of properties, the rent is going to increase, and the tenant going to pay, and your tenant going to pay down the loan, and your monthly cash flow will be higher than whatever the initial amount projected in the first year. So you have to own it for a long time in order to reap your financial benefits. It's not all about the first year projections and first year cash flow. This is a triplex, only $100,000. You may not see this. Look, even in the Midwest market, they are still getting some good appreciation. In case you have not heard, if you look at the current housing market news, you will see the Midwest and the Northeast are getting higher appreciation than the rest of the country, believe it or not. Anyway, let me see what else. This is triplex. Look at the cash flow. Look at the metrics. It's just mind-boggling. The cash flow is so high. Again, you have to factor in the maintenance and upkeep. As I mentioned, it'll be vacancy is going to be higher than 3%. Let's say 5 to 7% vacancy. Maintenance percentage, 5 to 7%. You have to plug the numbers correctly. If you buy from a good turnkey provider that can help you rehab the property, that will manage your property well, so you can be fine. There's nothing. It's still low risk, high reward. And with this property is a fourplex. I know it's more than $134K. This pro forma, I think, was last year. The prices have increased since then. So even at $150K fourplex in this market, all the numbers, it really works out well. I'm not going to go over the pro forma too much. It's just that these deals are available. This is off market. Quite a few number of our investors have purchased in this market over time. Is it a perfect investment? No, but it's better than doing nothing? Yes. As long as the expectation, as I mentioned, you have to factor in realistically the maintenance and upkeep and the vacancy and all that. You're gonna be fine. You hold it long term. Don't be stressed out when something bad happens. Back in the pandemic, when the mortgage rate were all the way back down to 3%, whatever, and there were a tremendous amount of demand and there's a lack of supply. We have homes skyrocketing during the pandemic all over the country and even in the Midwest. So some of our investors that purchased in this market back in 2020, 2021, these kind of houses that I just show you, they appreciated 10 to 20 to 25%. I'm not saying you could expect that moving forward, because 2025 and beyond is going to be a normal market, for lack of a better term. So expect 2 to 4% appreciation over time. But so it's a lot of people. I see a lot of people who purchased in the Midwest 4, 5, 6, 7 years ago. They have did well. I see other people's videos, YouTube videos, and other investment gurus. They invite their testimonial investors to speak about what they have done, and those investors, they purchase 5, 7, 10, 15 doors in the Midwest markets. And because of the appreciation back in the pandemic days, a few years ago, and the mortgage rate was so low, they were able to cash out, refinance their portfolio through the equity growth. Because at that time, a few years ago, there were multiple offers, bidding wars. So the homes were skyrocketing everywhere in the country. So even if you buy in the Midwest back in 2019, 2020, your portfolio had grown 20, 30, 40%. And a lot of investors, they scaled the portfolio back in the old days, 3, 4, 5 years ago. And they scaled a lot of properties. And my investors are no different. A number of our investors, they scaled the portfolio in Buffalo, in the Midwest type of market. It still makes sense because the low down payment, the low cost of the purchase, and the cash flow, it pretty much meet your financial goals, your financial freedom goals, or whatever they are. So we'll continue this market, but you have to diversify, right? As an investor, if you have a long-term goal, you buy a few properties in the Midwest for high cash flow, offset that with you buy in the growth markets that we have in our other markets in Florida, in Texas, and in Oklahoma and Alabama. For new construction, cost more, the cash flow a little bit less in those new construction turnkey properties in those the growth markets in the South, but that's more appreciation. It all depends on your goals. What are your goals? If you want cash flow, if you want to have high income stream, then there's something wrong to buy a number of properties in the Midwest market, Buffalo, for example. But if you have a longer time horizon, 10 to 15, 20 years of retirement horizon, you're younger, you're a millennial or whatever, you might want to buy in the high growth market, a little bit more expensive, high appreciation potential in the South and Southeast, new construction, $250K, $300K with 25% down payment. The cash flow may not be as high, at least initially, but over time, you're going to be fine. Allow the appreciation to occur the next 10 to 20 years in those growth markets in down South. Again, Buffalo is a very good market. What else can I say? The number speaks for itself. And if you surrounded yourself with a turnkey property manager in the Buffalo market, they have done an amazing job for our investors. Whether you own 3 rentals or 10 rentals in any market using system, our network, then all you need to do is spend like 1 to 2 hours per month in managing your real estate portfolio, so it can free up your time to do the things that are important to you, for yourself and your family. So you're not bogged down with the day-to-day minutia of managing your out-of-state real estate portfolio. Don't do that. Don't trade time for dollar. Your time is well spent doing other things. You don't need to become a full-time investor. It's too stressful. That's all I have to say. If you receive any value whatsoever from this video, please like and subscribe to my YouTube channel. And also comment below as well. And also become a free member of our network. All you have to do is put your email on the description below on my website, the newsletter tab, and just put down your email. And every morning you will receive the newsletter's information in inbox about investment opportunities, free content, free education, so you can be informed real estate investor regardless of where you live in the country. So long distance, outsource, turnkey, remote purchasing, and that's the wave of the future. Thank you so much for listening and watching, and I'll see you on next video. Bye-bye.